Welcome to FM Radio, your go-to podcast for everything in the world of funds management. Whether you're an experienced advisor, a seasoned investor, or just starting your journey, we're here to break down the complex world of funds management, all in a way that makes sense. Each episode, we'll talk to the experts to get their insights on everything from asset allocation to risk management and give you the inside track on how decisions are made. In this episode of FM Radio, we're going to be talking about multi-asset portfolios and getting the right mix of equities and other asset classes. And here to help us do that are two of my favourite multi-asset portfolio managers, David Seager and Alastair Macleod. Hey gentlemen, how are you going?
Morning, Pete.
Thanks, Pete. It's great to see that you've made the time to be here today. And I think it's an interesting time to bring you together and have this discussion because obviously the Elston multi-asset portfolio team has evolved over the years, initially from 2 portfolio managers to 3 and now 4. And you're both bringing some interesting skills. David, you've obviously been part of the team for a number of years. And Al, you're the new kid on the block. But I love the fact that you seem to be working so well together, but coming from very different backgrounds. I mean, what's the career journey been for you, David?
It's certainly been an interesting career for myself. And I'm very happy to be part of the Elston family for now, 4+ years. So it's been time's flown by. I've certainly come from a background of working in the industry and outside of it as well. I had the unfortunate privilege of graduating university in June 2008 at the height of the GFC. So unfortunately, looking for a job in the financial world was pretty difficult then. So I got into the industry in 2011 in the advice industry and worked my way up, completed all the CFA credentials that are important within the industry, and figured out that I needed some international experience as well. So I headed across to the UK for 4 years to try and be at the epicenter of the financial world. And that experience was invaluable, both from just being in a different environment outside of Australia, but also being exposed to so many different perspectives, companies. You wake up and the Asian markets are just finishing. You have the European markets and you go to bed when the American markets are in full swing. So you really are picking up so much experience from so many different sources as well. So that was fantastic. And working in the investment world in the city of London is something that's held me in good stead to bring back to Australia and to Brisbane and to join the Elston team. So having that global experience within the team has certainly, I think, added a little bit of perspective outside of the Australian market, and also dealing with the various fund managers that are dotted around the world in our portfolio. So it's certainly been an interesting journey to date, and looking forward to many more years of learnings as well.
And you've obviously been super busy, because to grow from 2 to 3, and now, Al, you've come on as the 4th member of the team.
Fourth wheel.
Yeah, the 4th wheel.
Better than the 3rd wheel, right? No disrespect, but better than the 3rd one.
And hopefully taking some of the burden off David, who's been working too hard.
Yeah.
I like to think so.
So, Al, you've had a very different sort of journey, but I guess similar in terms of overseas experience as well.
Yeah, no, was overseas, more in New York, but also had some time in London. In fact, I think I was hired as a software analyst in March 2000, which was pretty much the peak of the last bubble. And that didn't last too long.
Interesting time to live through, though.
Yeah, and it was a fascinating time where that anything tech or anything with .com after its name was really flying, and now it's anything with AI after its name is flying. So, but yeah, certainly learned a lot through that process and how cycles work, and I think that sort of colours how you think about investing. How these cycles ebb and flow, and things are popular and unpopular, and that can and sometimes doesn't correlate within the investment opportunity set. But no, I'm very excited to have joined. When I sat down with Dave we went down to the pub as part of the interview process to work out whether we could work together. We knew each other. We'd had a fair bit of engagement, probably in the preceding year with Elston, and understanding a bit more about the managed accounts and how the solutions that they provide. But yeah, it was probably culminated in a beer or two at the pub to say, okay, well, let's really sit down and work out, can we work together? And I think, I certainly left going, I think this is going to work pretty well. And yeah, I think it's a very complementary and overlapping skill set in terms of what, Dave and I bring to the multi-asset portfolios, along with Leon and Bruce. And yeah, it's great to be part of a very established team that's and had a lot of success. And I'm keen to contribute and grow it from here.
Pete, one of the things that I loved having Alastair join was his experience with not only working in different areas of the world, but also working on his own strategies as well. And that's where life lessons are really learned, is when you're sitting at the desk and you're trying your absolute hardest to build these strategies over a long period of time. And that insight that you learn is so valuable when you're sitting down with different people, trying to do their little strategies themselves and to ask the right question at the right time.
So what was the learning curve then? I would imagine you're talking about Wheelhouse, and it was something that was your baby, but I'd imagine also a very steep learning curve. Like, what was that?
Yeah, I mean, I think running your own business, you learn a heap in a pretty short amount of time, but then also from an investment perspective as well, learning what works and, different, may have worked one time but not work the next. And I think taking stock and going, okay, well, what are we trying to do here? And how do we increase the certainty and the reliability of the outcome? What are we communicating to investors that they should expect? And are we doing everything possible that will execute on that so that there aren't any surprises? And I think if you can do that, I mean, my learning was if an investor knows what they're likely to expect and you deliver on that, then you're doing your job in terms of fulfilling, perhaps there's certainly a role for an advisor in allocating, is it the right strategy for that client? But, from our perspective, it was really, how do we just reduce the range of outcomes in terms of what we're trying to deliver and deliver on that investment solution?
The other thing that's been a breath of fresh air is having some fresh eyes, him seeing things through a different lens to us. And that's what different perspectives and different skill sets brings to the table, is just seeing the same information through a different lens. And there's certainly been some interesting debates around the table and running through different parts of the portfolio of really convincing Al of why they should be in the portfolio in certain situations, but also hearing the flip side to that and going, yeah, maybe this is an area that we need to review and do a bit more work on. So a fresh pair of eyes is always a very welcome addition, but it's got to be the right pair of eyes. So Al's experience is invaluable, and I'm very excited to have him on.
It's funny to observe it. It's a really interesting dynamic from my point of view to see, as you said, there's this the pub interview, which is probably an Elston tradition. Obviously went well, and you get on very well. And that's a really positive thing. Like the dynamic is so strong. You're very similar personalities, I guess.
He talks more than me.
Only just.
And
depending on what subject.
Exactly.
and you're both, I guess, there's no arrogance. There's a polite way of putting together, I guess, an alternate point of view, but it's welcomed.
Yeah, I think I've always thought with me, and I think with Dave as well, and Bruce, like there's a natural curiosity about why this is behaving like this. And if you can take a step back and ask those questions, why, and understand the reasons for it, and you've got teammates or colleagues or co-workers who share the same view, then it's great because you can challenge each other and there aren't, sort of fortified barriers that you can, things that are off limit and things that are that you can discuss. So, and that's where, that's the joy of coming to work every day, is to have those conversations about markets, about what may or may not happen, how our managers may or may not perform, how asset classes may or may not, what might happen. And it's really, you can talk about anything, but you're not going to, the structure is so flat that anyone can have a voice and talk about it, as long as they've got a basis for what they're saying and a reason for why. And if not, what I've learned in my short time there is that people will take a step back and go, okay, what is the basis for what we're doing this? And is it aligned with our values and our strategy?
And I think that's the important part of the culture at Elston, is that flat team structure where whether you've had 30 years experience or 10 years experience, your voice is going to be heard at the table. As long as you've got good rationale and facts to back it up, you're going to get heard, and people are willing to listen to you if you thought through it carefully with something that is worthwhile putting at the table and discussing. So that's kudos to the founders for building that culture in the business over a long period of time. And I've certainly felt it over the last 4 years, where voices around the table are heard regardless of experience, as long as you're able to back it up.
And I think it builds a better outcome.
I think what's interesting is you talking about, I guess, the conversations in the room. Was it the Hamilton musical? I just want to be in the room when it happens. And in my head, I always go, oh, it's inside the war room. That's the way to describe it. But it's not a war room. The way that it sounds like it's very respectful of opinions, and it's a very healthy process of analysing and discussing what might actually get the nod for the portfolio, which is terrific. But it's also, I guess, you touched on something before, Alastair. You're saying, it's about communication with our clients. I guess that's a really important part of, I guess, what Elston does as well, because the things that we're talking about here are about communicating how we go about things, why we do things, and then making sure that that's understood by advisors and by their clients. They understand this is how we do things and this is why we do things. I mean, do you think that seems to be like such an important element?
Well, I think it adds and builds transparency in everything. That there's a reason for it that's logical and well thought out and considered. And then whether that works or doesn't work, it makes it's obvious. There's so much transparency about the rationale behind it that when you're talking to advisors and ultimately to the investors, it's a pretty clear laid out process for how we got to that position and what we're going to do about it. Whether it works, and sometimes not everything works, but at least the logic behind it is very transparent and apparent. And I think if you can get that buy-in from investors ultimately into the rationale, then the outcomes will come. The outcomes that you're designing for and you want will be delivered, and that's builds a very healthy relationship between what we're trying to do and the investor.
Yeah, it's about the client experience. So that communication piece is really important to make sure that the decisions being made in the portfolio are clearly communicated to both the advisor, who's then able to translate that story onto clients that they think is important as well.
It's interesting when you talk about communication, and I guess maybe at certain points there may be not a miscommunication, but maybe misconceptions about what's really happening. I guess from a client point of view, and maybe even from an advisor point of view, there may be a perception that Elston is very much about equities. But of course, your role is really, I guess the yin and the yang to that. You're about multi-asset portfolios. What's the role of multi-asset portfolios really, I guess, in terms of, we're talking about communicating again. Why do I need to do that? Why wouldn't I just be 100% equities? If equities is where the long-term growth is, why wouldn't I just be there?
Yeah, it's a good question. I think if you look at the long-term history of equities, the highest returning asset class, that's why the question's asked. But equally, equities give you the widest range of outcomes. And, depending upon where an investor is in their life cycle, whether they're in retirement, having that, what you're really trying to do is deliver a very predictable and reliable outcome. Now, equities are not always going to be able to deliver that. And having exposure to other asset classes that perform differently in different market environments can really help smooth that ride and increase the certainty of that outcome being delivered.
So what are some of those asset classes that we're talking about? Are we talking infrastructure? We're talking bonds?
Yeah. Property, listed property is another asset class. Listed infrastructure, both domestic bonds, so bonds in Australia, but also international bonds across the world as well. And just as importantly, cash is another critical one there as well that provides us liquidity within portfolios. So, Peter, it's about the journey. A client is joining the train. We don't want it to be a roller coaster. Now, equities can be a roller coaster at times. They can be exhilarating. They can be up 20% one year and down 20% the next year. Multi-asset investing is about providing a smoother journey over a long period of time.
And I think these different asset classes really help give flexibility in terms of how we craft that portfolio, that, for different shocks or scenarios that might turn out, which always turn out, different asset classes behave differently, very differently in those different environments.
Al, at the end of 2019, do you think anyone was predicting COVID to be impacting markets in Q1 the next year?
Yeah.
But during that period of time, multi-assets really played its part in smoothing that volatility out. Equity portfolios or equity markets were down 20, 30%. Multi-assets were not down that amount. Why was that?
Well, in that environment, you had the classic, risk off. Bonds actually did quite, appreciated in value over the quarter because people thought interest rates would be cut. And it's really that shock of what happens to the macro environment and to interest rates meant that bonds were really that ballast in your portfolio and were really able to stabilise returns, along with other asset exposures, whether they were unhedged international shares and currencies, or they're different asset classes, all behave differently in different market environments. And I think having an all share portfolio where everything is going down together, having these different assets in your portfolio, their role is to smooth that return. The role is to be more opportunistic with different market environments, and that's the role that active management can help play in that multi-asset portfolio.
So how do you get the mix right? Like, where do you start? Like, where's the recipe for baking the multi-portfolio cake? How do you do that?
It's an interesting process. The process is strategic asset allocation. Think about it as building the foundations for a house. Now, no one really sees the foundations, but it's arguably the most important thing. So that's looking at the long-term expected returns for each asset class and blending exposures together to provide a kind of a weighted average of those expected returns over a 10 to 15 year period. Now that's the time frame that we need to work through a traditional business cycle, 7+ years. And what that provides is a model on what we can expect from each asset class. Now, it's not going to be the same every single year. There's going to be volatility involved. There's going to be movement in the performance of each asset class. But if we figure out what the best combination of assets is over the long term, based on characteristics of return and risk, we can provide some guidance on what we think exposures to certain asset classes is going to be. For instance, the classic balanced, which is a growth 70 portfolio, will have 70% in growth assets, which are equities, property and infrastructure, and 30% in defensive assets, bonds and cash. Now, that combination of assets is going to provide you X% over the next 10 years. That's the starting blocks. We can then go and start thinking about things above the foundations. What rooms are we going to have? What roof are we going to have? Where the window is going to be placed? And that's the active part in terms of maybe what managers or what shares populate those asset classes.
And I guess you get a chance to look a bit, I guess, broader. For me, it's like you're not necessarily just looking at what's happening in Australia. You talked about property. Well, property can be something that's happening in Europe, or even what's happening in the share market in Europe or emerging markets. Do you like that kind of idea, I guess, of the geography, the flexibility in the geography of what you're doing?
It certainly provides variety. It provides the need to be across different parts of the world in terms of macroeconomic environments. What's happening in Europe is going to be very different to what's happening in the US. And so you do need to have an understanding of maybe what is going on at a macro level to provide you an indication of where you would like to move anything in the portfolio. Do you think you need to have less international equities? What managers do you think you should be populated with the international equities? As compared to maybe domestically, what's the Australian government bonds going to do in the next 5 to 10 years, or even shorter period of time than that? So the things that you cover in everyday multi-asset portfolio management is very stimulating. It challenges your mindset every single day, and it provides you some very humbling lessons along the way as well. So not everything is going to work, but it's the process that's the most important thing. What process do you have in place that you can follow every day? And what skill sets do you have sitting around a table to help you on that process to hopefully get things more right than wrong?
It sounds like to me, when I think about portfolio managers, they probably have a slightly different gearing in their head. They think about the world in a slightly different way to maybe the way other people think. Like, I guess external to the industry, you would think, I need maximum returns. But within the industry and within a portfolio management team, it's about managing the risk. It's about risk-adjusted returns. Is that really key? I guess you're thinking it embraces that all the way through.
Yeah, I think in portfolio management or assessing any sort of investment return, how much it was down to skill and how much it was down to luck and being in the right place at the right time. And often it's very difficult to pull those two apart. And that's where I think the fundamental analysis, the experience, the understanding of cycles, of sometimes things ebb and flow in terms of their popularity and whether they're in favour or not. You can really pull apart the luck and skill dynamic. And, hopefully you put together a portfolio which is very evidence-based and very reliant on the skill component, as opposed to, well, if I look back at the last, 2 years and all these for example, technology stocks have done very well. Now, there's reasons why that's the case, but managers who focus on those names, is it skill or are they fortunate they just happen to be in an area that was very popular at the time? And I think being able to step back and having some experience in these different cycles to pull that relationship apart helps you build better portfolios, because you're much better at building a balanced portfolio that has different characteristics and different skill sets involved, that is less likely to be blown around by, popularity contests or what's in and out of favour at any given point.
I think that's really good, Al. I've loved having the discussion with you guys today about multi-asset portfolios. It's been a really good introduction and a good sense of the role of multi-asset portfolios. Next time we get together, I'm not sure what you'd want to discuss. It might be good to talk about how you, vet fund managers. How do you select them? Must be quite a process. And I imagine you don't look tough, but I imagine you are tough.
There's some tough questions asked for sure, but no, we'd be delighted to come back and dive a little bit deeper into the weeds of what goes into the portfolios and maybe the process involved with selecting the fund managers or the different exposures to the different asset classes.
Well, that'd be awesome. I'd really look forward to that. We'll see you next time. Thanks very much, guys. That's all for this episode of FM Radio. We hope you can join us again soon as we tune into another aspect of funds management that affects you and your clients. In closing, I'd just like to say that Elston acknowledges the traditional owners of country throughout Australia and acknowledges their continuing connection to land, waters and community. We pay our respects to the people, the cultures and the elders, past, present and emerging. FM Radio was recorded at the Pod at Cutting Edge Studios West End. It was hosted by Peter Goodall, and today's guests were Elston multi-asset portfolio managers David Seager and Alastair Macleod. For more FM radio episodes and full transcripts of the interviews, visit elston.com.au. And if you'd like to subscribe to our podcast series to make sure you don't miss a thing, you'll find FM radio on your favourite platforms, including Spotify, Apple and Google Podcasts. The information provided in this podcast is general in nature. You must consider your own circumstances prior to making any investment. For more information, go to elston.com.au or speak to your financial advisor. Elston Asset Management is authorised by EP Financial Services, AFSL number 325252.